Whether it's choosing a life partner or business partner, you want to make sure you choose wisely. Otherwise, you could be heading for a very messy divorce soon after walking down the aisle. So here are 8 considerations to help you choose the right business partner. First, run away from the part-time entrepreneur. Your partners need to be fully committed. Someone who wants to dip their toes in and test the waters before taking the plunge isn't for you. If you've all agreed to quit your jobs once you receive funding, then you have no use for someone who wants to play it safe on the sidelines and wait until the business takes off before joining you. Being an entrepreneur obviously isn't for everyone, which is fine. However, you do need your partners to take the same level of risk you're taking. There needs to definitely be a meeting of the minds in that regard. Second, do your homework. Ask people in your network about your potential partner's reputation. More likely than not, someone can provide you with insight. You should also do an online search to see if there are any lawsuits filed against your partners and if those suits have any merit. Also, how do your partners, or potential partners, I should say, treat their employees or others around them? The way a leader treats their employees can be very telling. Watch and listen to how your prospective partner speaks to his or her current employees and pay attention to their response. I also like to have lunch or dinner with them, as you can glean a lot from someone by observing how they treat, the valet, the hostess, and the wait staff. Number 3, too many priorities. A lot of partners have other businesses. Sure, they're entrepreneurial, so that makes sense. This isn't necessarily a bad thing so long as your partner's role and contribution are identified at the outset of your endeavor, and all the parties understand the level of commitment required to make the venture a success. A partner with too many priorities probably isn't going to add much value to your business. Number 4, yin and yang. Love that saying. Each partner should bring their respective expertise to the venture. Everyone has strengths and weaknesses. Identify each party's strength and weakness and how they'll benefit the business. It's okay if your partner doesn't have expertise. Perhaps they're a workhorse and will help you launch, though that needs to be reflected somewhere, perhaps in reduced equity. Number 5, the responsibilities are unbalanced. Listen, launching and running your own business takes a lot of work. Everybody needs to roll up their sleeves and get their hands dirty. Points of contention often arise when one partner is carrying most of the workload while the other doesn't contribute much. You know what I'm talking about. You've all seen it. They show up to a meeting with some ideas, but when it comes to push and shove and execution, they're nowhere to be found. One thing worth mentioning is to watch for investor partners who want to take a management fee for the time helping you build your business. This is often a huge friction point between investors and entrepreneurs. While a nominal percentage of roughly maybe 5 to 7% for a management fee is reasonable, so long as you're receiving something of value in return. I've seen some of these fees upwards of 20%, and the investor is just padding his or her wallet without even a scintilla of contribution to the business. Watch out for that. Number 6, you can't handle the truth. A partner should be able to own up to their mistakes. You don't want someone who lies about or hides them, passes blame, or makes excuses. Listen, mistakes happen. Learn from them, move on, and don't make the same mistake twice. Also, someone who conveniently remembers things differently from you or reneges on the terms of your partnership is no good for your business. Walk away from them. And if you can't walk away, document everything, as you may need it at some point, perhaps in a courtroom, which is unfortunate. Quick story for you. I know someone who was vetting a potential partner, and every time they spoke to them, the deal changed, and not for the better. Every time they talked, it got worse and worse and worse. It got to the point where this particular individual didn't even want to speak to them anymore because he was afraid how lopsided the partnership arrangement was going to be. So just some food for thought. So a partner with these traits will be a cancer to your organization and cause you a lot of pain long term. You simply can't trust them. Number 7, likability. This is huge, very huge. At the end of the day, you need to actually like your partner. Hey, go figure, right? You're going to spend more time with them than with your own family. So it makes sense that you should see eye to eye and like each other. If you're waking up each morning dreading having to deal with them, then that's a recipe for disaster. A good rule of thumb is to ask yourself if you could see yourself going on vacation with them. If you can't, go ahead and punt. Number 8, and the last consideration, pick up ball and take it 12. In other words, don't be afraid to walk away. I'd rather have no deal than a bad deal. Sometimes we're so close to launching that we ignore the red flags. Trust me, you'll be better off walking away than having to deal with the headaches of a failed partnership. Those are all the nuggets I got today. Good luck, and I'll see you next time. Bye.